Ever wondered about the 4 unstoppable dividend growth stocks you should buy and hold right now? In the vast universe of investing, dividend growth stocks are like the North Star, guiding investors towards steady, reliable returns. They're the bedrock of any robust portfolio, offering a steady stream of income regardless of market conditions. In this video, we're going to delve into the world of 4 such stocks that have been showing unstoppable growth. They are Johnson & Johnson, AbbVie Inc., Microsoft Corporation, and Eli Lilly and Company. These giants, hailing from diverse sectors, have not only weathered various economic storms, but they've also consistently rewarded their shareholders with growing dividends. So, whether you're a seasoned investor or just starting out, these 4 stocks deserve your attention. Stay tuned to get an in-depth look at each of these stocks and why they are a great addition to your portfolio. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. First up, we have Johnson & Johnson, a true titan in the healthcare sector. With a lineage stretching back to the late 19th century, this company has proven its mettle time and again by navigating through economic ups and downs with a grace that speaks volumes about its robust business model. Johnson & Johnson isn't just a single entity, it's a family of over 270 companies spread across the globe. This conglomerate operates in 3 key segments: pharmaceuticals, medical devices, and consumer health products. Each of these sectors boasts a diverse range of products, from household name brands like Band-Aid and Tylenol, to high-tech medical devices and novel pharmaceuticals. This broad-based approach to healthcare allows Johnson & Johnson to weather volatility in any one area, providing a measure of stability that is hard to come by in today's fast-paced market. But let's get to the heart of why we're talking about Johnson & Johnson today: its consistent dividend growth. For over 55 years, Johnson & Johnson has been increasing its dividend, earning the coveted title of a Dividend King. This is no small feat, it's a testament to the company's financial strength and commitment to returning value to its shareholders. Now you might be wondering, what makes Johnson & Johnson such a strong choice for long-term investors? Well, it's simple. The company's diversified healthcare portfolio, coupled with its consistent dividend growth, makes it a reliable bet. Healthcare is a necessity, not a luxury. People will always need medical supplies, pharmaceuticals, and consumer health products. This makes Johnson & Johnson somewhat insulated from the economic cycles that can impact other industries. Furthermore, the company's commitment to research and development ensures it stays on the cutting edge of healthcare advancements. This positions it well to continue delivering innovative products and, importantly, growing its dividends. With its steady dividend growth and robust healthcare portfolio, Johnson & Johnson is a solid pick for any investor. It's a stock that offers both stability and growth, a rare combination that makes it stand out in the investment world. Next on our list is AbbVie, a pharmaceutical company that's been on an impressive growth trajectory. AbbVie Inc. is no ordinary pharmaceutical company. It's a powerhouse in the field, with a robust business model that's been churning out growth and prosperity. With its headquarters nestled in Chicago, Illinois, AbbVie has been a consistent player in the global pharmaceutical industry since its inception in 2013. AbbVie's recent performance is a testament to its relentless pursuit of excellence. In the past few years, this pharmaceutical giant has proven its mettle with an impressive track record of strong financial performance. The company's net revenues have been on a steady upward climb, and with a strong emphasis on research and development, it's clear that AbbVie is not just resting on its laurels. But the true star of the show is AbbVie's dividend growth. The company has consistently increased its dividends over the years, making it a darling among income-focused investors. The company's dividend growth isn't just impressive, it's unstoppable. This persistent increase in dividends is a clear reflection of AbbVie's commitment to returning value to its shareholders. The company's promising pipeline of drugs is another aspect that sets it apart. From treatments for debilitating diseases like rheumatoid arthritis and cancer, to therapies for psoriasis and Crohn's disease, AbbVie's pipeline is brimming with potential. The company's focus on innovation and its dedication to tackling some of the toughest health challenges of our time underscore its potential for future growth. What's more, the company's strategic acquisitions, like its 2020 acquisition of Allergan, have further bolstered its portfolio, providing additional avenues for growth and diversification. In sum, AbbVie's solid business model, coupled with its consistent financial performance, strong dividend growth, and promising pipeline, make it a compelling prospect for investors. Whether you're an income-focused investor drawn to its robust dividend growth or a growth-oriented investor intrigued by its promising pipeline, AbbVie has something to offer. AbbVie's impressive growth and strong pipeline make it a promising pick for investors seeking dividend growth. Moving on, we have Microsoft, a tech giant that needs no introduction. From its humble beginnings in a garage to its status as a global powerhouse, Microsoft has been a game-changer in the world of technology. But beyond its well-known products like Windows and Office, Microsoft boasts a diverse product portfolio that spans across cloud computing, gaming, and even artificial intelligence. Let's talk about Microsoft's consistent dividend growth. For the past 15 years, Microsoft has been steadily increasing its dividend payout. That's no small feat. This consistency is a testament to Microsoft's strong financials and its commitment to return capital to its shareholders. For those seeking a balance between growth and income in their investment portfolio, Microsoft provides an attractive proposition. So, what makes Microsoft's financials strong? Well, it's a combination of its wide moat, its high profit margins, and its robust cash flows. A wide moat refers to a company's competitive advantage. In Microsoft's case, this advantage comes from its dominant position in the software industry, its innovative products, and its vast user base. High profit margins, on the other hand, indicate that Microsoft can convert a large portion of its revenues into profits. And robust cash flows? They provide the financial flexibility that Microsoft needs to invest in growth opportunities, pay down debt, and yes, increase dividends. Now you might be thinking, that's great, but what's in it for me? Well, if you're an investor seeking both growth and income, Microsoft could be a good fit. Its growth prospects are fueled by its innovative products and services that cater to the ever-evolving needs of consumers and businesses. And its consistent dividend growth? It provides a steady stream of income, making Microsoft a compelling pick for anyone looking to build a robust and diversified investment portfolio. Microsoft's strong financials and consistent dividend growth make it a compelling pick for any investor. Last, but certainly not least, we have Eli Lilly, a leader in the pharmaceutical industry. Eli Lilly has been around for well over 100 years, and in that time they've made significant contributions to the world of medicine. They've been at the forefront of numerous medical breakthroughs and have consistently shown themselves to be innovators in their field. Eli Lilly's business is primarily based on the discovery, development, manufacturing, and marketing of pharmaceutical products. They have a strong and diverse portfolio that includes drugs for diabetes, cancer, and autoimmune diseases, among others. The company's commitment to research and development has led to a robust pipeline of potential new drugs, which could drive future growth. In recent years, Eli Lilly's performance has been commendable. They've experienced steady revenue growth, and their profitability has been strong. This financial stability has allowed them to consistently increase their dividend payouts to shareholders. Over the past decade, Eli Lilly's dividend has grown at an average rate of nearly 5% per year. Their dividend growth isn't just a sign of financial strength, though. It's also a testament to the company's commitment to its shareholders. Eli Lilly understands the importance of providing a return on investment, and they've demonstrated a willingness to share their success with those who've invested in them. The future looks bright for Eli Lilly. Their innovative drugs and strong pipeline, coupled with their financial stability and commitment to dividends, make them a compelling investment option. So if you're looking for a stock with a rich history, a robust portfolio, and a track record of dividend growth, Eli Lilly could be just the ticket. In conclusion, there's a lot to like about Eli Lilly. From their innovative product line to their consistent dividend growth, they've proven themselves to be a company that's worth considering for any investor. Eli Lilly's innovative product line and consistent dividend growth make it a strong pick for investors. There you have it. 4 unstoppable dividend growth stocks to buy and hold. We've journeyed through the robust healthcare sector with Johnson & Johnson and AbbVie Inc., both showing exceptional promise in delivering continual dividends. Similarly, tech titan Microsoft Corporation and pharmaceutical giant Eli Lilly and Company have demonstrated their prowess in maintaining steady dividend growth, making them alluring options for long-term investments. Remember, the power of these dividends lies not just in their present value but in their potential growth over time, a crucial element for any successful long-term investment strategy. By investing wisely in these stocks, you're setting the stage for a secure financial future. one dividend at a time. These 4 companies, with their proven track records and promising outlooks, could be the key to unlocking that future. If you found this video helpful, don't forget to subscribe, like, and share. Stay tuned for more insightful investment videos. Happy investing!